FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/26/20. Well, we started an interview yesterday with Danielle Park, but then we had invasion of the leaf blowers and the hedge trimmers. And literally, I could not hear myself think. So we're getting back with Danielle today, but we're going to be talking about the global economic crisis. And it's amazing that bat soup, one bowl of bat soup can lead to an economic crisis. How does that happen? What is your opinion on it? Why don't you write us? Send us an email, kl@kerrylutz.com, kl@kerrylutz.com. So Danielle, it's a fine mess we find ourselves in. We see just basically the entire global economy collapsing before our very eyes. Helicopter money, they're printing it up. Stimulus, subsidies, no burden is too great for the money printers to try to avoid this fate. But what of it? Where are we now, and what can we expect? Because in all likelihood, once you start down this road, there's nothing you can do really to alter the outcome of the economy.
Well, if we back up a little bit before we go to where we are right now, the context for where we are and why things are such a crisis at the moment is the lack of preparedness that has gone on over the decade and more before it, right? The behaviors and choices and policies that we've had in place have led us to this point of extreme fragility. And so when I see someone like Ben Bernanke, your former FOMC head, on the airwaves today saying, that this isn't going to be a depression, but it's a very, it's going to be an extended deep recession followed by a quick rebound, I say. And are you sorry for the role, sir, that you played in setting us up for this very fragile condition in which we now find ourselves? And of course, he is not, because he is completely, oblivious to the harm that their low rates and prompting everyone to borrow more and more each downturn has really set us up for crisis. And yes, it's a health crisis, and there was, there's a certain ebb and flow to that, and hopefully we'll get a treatment, and hopefully we'll, be able to slow the spread, because that's important to not overwhelm the hospitals and resources and respirators that are available. So absolutely, social distancing, slowing it out and all that. But there was always going to be a pandemic or a major crisis like this that was going to hit. That's just the nature of the world, and human history certainly supports that. And the problem is the cupboard was bare coming into it, right? People have spent like crazy, taken on debt, used lines of credit instead of savings because they have been spending beyond their means for years. And corporations have done the same, in particular in the last decade, where they have just gone, crazy with wasteful habits. So the company management has been extremely destructive in the choices they've made. Not every company management, but the norm. The consensus view has been, when rates are low, borrow cheap and buy back your own shares, or do quick acquisitions, make a quick buck, pay the dividends out to the shareholders to keep them happy, heavily compensate the executives to extreme levels. All of this was poor management.
Well, it's worse than that. It's corrupt, it's rapacious, and it's destructive, not just to the company involved, but to the countries involved, because I assume that all over the world, managements were buying back their own shares. And you saw the little missive that I sent out over the weekend and evidently some of the stuff that I mentioned is actually finding its way in there, but they're banning share buybacks for a year. Honestly, it's not going to matter, because no company is going to be buying back its shares. They're just going to be desperately trying to stay in business. So we had a total collapse of morality and ethics. And you and I have talked about this quite often. And the Constitution of the United States, as the founding fathers said, was written for a moral populace. And if you don't have morality, eventually you're going to have a collapse whether it's a moral collapse, a financial collapse, you can only steal for so long. And then the forces of economics are going to close in on you. And that's what they've been on, is a feeding frenzy, a massive theft-a-thon or steal-a-thon from the shareholders and from the employees as well when they loot the pension plans. And this is just the natural outgrowth. I just want to know, how do we become a moral people again? And I've been guilty of my indiscretions as well as a human being, as we all are. But morality in the financial sector, the two are distant cousins, probably thrice removed at best. There is no morality. That old saying, you eat what you kill on Wall Street, that kind of sums it up.
Yeah, but for households, what I'm thinking is, I remember my grandparents who were pivotal in my raising as a child, and they had been born at the turn of the century, and they'd lived through the pandemic of, the Spanish flu of 1918. My grandfather was 18 then, lived through the Depression, the two world wars, and by the time I came along when they were 60, they were fountains of great wisdom and personal discipline, and it was an enormous gift to me as a child. I learned a lot from them, and I've passed that on in my life to whoever I can, because they talked about, my grandfather talked about the damn bankers back then. I grew up disliking bankers. I didn't really understand why.
For good reason, too, for good reason.
But in my life, I came to understand fully, and that was certainly made clear when I went to work for a major investment bank in the late 1990s, and it wasn't very long before I was quickly understanding why there was such a problem with the system. But anyway, the thing is, for individuals, they do not need to buy the party line. They do not need to do all the self-destructive things. There are so many misunderstandings or misconceptions which have been sold to us from this system that is extremely reckless with life savings. Many of the financial types that work on Wall Street spend like wild sailors and end up with lots of debt. As I wrote on the blog this week, the people with the highest incomes also have the highest debt, because they do all these levered things, because they do finance cars, the very expensive ones, and flip them every couple of years. As long as cash flow is coming, they live like kings, right? But then every time you get into a downturn like this, where bonuses collapse, where payouts suffer, where layoffs spread, all of a sudden they're the ones getting their Porsches taken from the driveway by the repo man as well. And yet these are the people that have been so-called experts leading the financial choices and health of the nation. So what I try and do is basically a massive debriefing of that and say to people, listen, here's how you build a financial stability for yourself. It is first and foremost, you save from your income. You work longer than you think. This whole obsession with how do I quit work as early as possible, most people, A, can't afford it, and B, shouldn't even be thinking about it, especially when life expectancy is so long now. So the idea that there's this Freedom 55 is a fallacy. It's a marketing concept. And they sell you risk in exchange for your cash when you buy into that belief. And that is typically a very damaging thing that happens to individuals. I've said this, we've been through 20 years now. This is the third massive bear market and liquidity event where everything gets sold and thrown out the window. And individuals, I was reading something today that funeral homes are seeing a big downturn in the people that are coming in to make arrangements. Because of the stock market, not just because of the coronavirus, but because people have lost so much. We're seeing a big downturn in interest in the real estate market. People are worried that they're not going to be able to buy and complete contracts that they have signed on to because they've lost in the stock market. My point would be, you're doing it wrong. You shouldn't have anything to do with the stock market in funds that you're trying to buy a house with. First of all, you need to make pots of money. If you want to be buried or have a funeral arrangement, that money shouldn't be in the stock market either. You have to manage your cash. So you build it up. Most people don't need an asset manager, and they don't need to be picking stocks. They need to be getting out of debt, building up their savings and safe deposits, having fat budgets in their operating companies, cash. Most restaurants have a couple of days of cash in their business. A really conservative one has about a week's cash. So what we're going to see in this is some of these downturns and some of these closures that have happened are going to be permanent. right? And people will figure out, and it's important, Carrie, because if you remember, the largest employment gains that were made in the last decade were in these services, restaurants and tourism, entertainment sector. That's where the bulk of the jobs were. And now that's where the bulk of the layoffs are. And that's going to impact people because they haven't had enough income. They haven't managed it properly. They've been trying to gamble instead of save. All these things have a very destructive impact on the foundation, which means that when you get this shock, people are devastated and you get bankruptcies and all that stuff. So yes, we need this sort of infusion of emergency cash to try and keep people in their apartments and keep the roof over their head. But I think the longer term impact of this is going to be like my grandparents. It's going to be a revelation that you don't need to have all these payments, that it is more peaceful and happy to live on less, spend less and save more, to have more cushion, to downsize your massive house and mortgage. I think it's going to make boomers who are already in the trying to sell and downsize phase want to do that even more. It's going to make a lot of businesses understand that they can run on less staff. The ones that even make it through, it's going to make people realize they can work from home more. We already had that big downturn in commercial real estate because of the WeWork fiasco, if you remember. The past few months. And there was this huge surplus of supply already out there. Well, now there's going to be even more, and we saw, I was reading a statistic, the shares of business development companies that invest in small and mid-sized businesses are down 50% so far this year.
Wow.
Because there's just going to be less small and mid-sized businesses because this is hitting at a time when there's just no resiliency.
Yeah. Well, the big companies will get the bailouts, hopefully with a lot of strings attached, but you know how that works. It's funny when you talk about your grandparents. I had two sets of grandparents. One set was living high on the hog, then the Depression hit, and they kind of never recovered. The other side was doing well, then the Depression hit, and he did extremely well and got wealthy on all these government contracts because they called him Honest Abe, because he always brought the contracts in under budget, ahead of schedule. And I wonder if we're going to have this instance of two sets of people, the people that actually wind up better off for the financial dislocation and the people that wind up worse. When you were talking before, Bernanke saying, "Oh, we'll just have a quick recession and everything will be fine," it reminds me of when McCain was running for president during the crash of 2008, and he said his words, and I've heard them played back so many times: "The economy is fundamentally sound," and I've heard the same people, different people, but saying the same words this time. The economy is fundamentally sound. And you and I, maybe we've been talking to a diminishing audience for the past 8 years because everything appeared to be normal. But you and I knew that the gimmicks being used, like $4.5 trillion worth of stock buybacks to jack up the stock market, could not go on indefinitely, and that the path was a path to ruin.
FSN Radio. It's all about what's next.
Financial Survival Network is brought to you today by Oren Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Oren is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Oren's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Oren's been called one of the best in the junior exploration sector. Oren trades on the TSX and the NYSE under AUG. To learn more, go to orenresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Because it was uneconomical. See, if you did math, you knew it was destructive and uneconomical. If you didn't do math, you were at an advantage because you could just blindly buy indiscriminately and not worry. But you see, this all comes back to why we're so vulnerable now to this downturn. Here's a couple of quick numbers just to review, Carrie. You know that $1 trillion used to be considered a lot, right? We wouldn't hear $1 trillion much in the normal discussion, even in financial markets. Like back in, the 2008 downturn, the over-the-counter derivatives market was estimated to be about $50 trillion. And everybody was like, oh my God, $50 trillion. This is a weapon of mass destruction. This is a huge risk. How are we going to reconcile this, right? Now, the over-the-counter derivatives market is estimated to be about $600 trillion. Okay?
Quadrillions. We're looking quadrillions in some of these markets here, Danielle.
Quadrillions.
Yeah, quadrillions, whatever that is. I don't quite know what that number is, but it's more than $1 trillion.
Well, and another point of reference is that the AIC bailout that was happening back in 2008 was for $85 billion, and everyone was saying, "Oh my God, that's outrageous."
Obscene.
Well, then, Bernanke went on to do $85 billion a month in QE purchases, if you recall. And the current, as Danielle DiMartino-Booth was pointing out just recently, the current run rate of how much Fed liquidity is gushing into the banking sector is at $625 billion every 5 days right now. So you see, this is what happens when we get away from anything economical, financially sane, or sustainable. You get into this Wild West craziness where crazy people just keep throwing zeros at things and think they're geniuses, and geniuses before the fall, as Roger Lowenstein so brilliantly pointed out in the book about the collapse of the long-term capital. But it's so true, geniuses before the fall. Those people who thought their financial advisors were genius or that they were excellent at stock picking in the past few years were in a fool's paradise. They were not geniuses. They were reckless. They were buying things with no care for cost or risk. And then this is how you set up for a market that has now collapsed 30% in the quickest, shortest time in history. Okay, worse than heading into the crash of 29. And the reason I know we're not near the bottom, Carrie, is because there's still all these people talking about, is it time to buy the dip? And when it gets to be the actual time to buy at the end of this bear market,
no one will want to buy.
They will be nowhere to be found.
Are you crazy? You know how much money I lost in the stock market?
They will have recently sold out and cashed out their losses near the bottom, and they will hide away, and they will bear the price of this. Now, I'm worried about pensions because pensions, as I've said, have deficits coming into this mess because they too have not been managed properly. They've been putting all the chips on gamble and hope instead of prudent management and increasing contributions and all the things that needed to be done. And so now you've got this crash in stocks at the same time that you've got interest rates below 1%. So this is going to be catastrophic because now it's going to be, as I've said, once you pull back the curtain and realize that there wasn't a genius at the helm, that it was actually a reckless management that was going on, now the pitchforks start coming and the blame starts spreading and the lawsuits will go crazy, but it will not replace the funds which are not in the jar.
Yeah, they don't exist. It's gone. Good friend of mine, he's a pilot, and his airline went bankrupt, basically stole his pension, set up a 401k, but pretty much took all the money. And then he built up his 401k. He had a very comfortable retirement lined up. He's only a year older than me. And now I haven't even asked him. I told him like 2-3 weeks ago, I saw him when the first thing started. I said, might be a good idea to get defensive, at least buy some puts. Buy some puts because this market, it just can't hold up. And, here we are now. He could have just sold. He would have taken his cash and then sit back. He's going to retire. Well, he was planning on retiring never, but there's mandatory retirement at 65 in the U.S. airlines, so he could go fly for a couple more years, either private or foreign airlines or cargo. But now he's probably got a third less money, and his nerves are probably shot. So asset
allocation, he shouldn't have had a lot of his money in the stock market in any event, given his age and proximity to retirement.
25% to a third, maybe.
Maximum.
Maybe.
And I've also used this analogy, and I wish people would get it more. When you're putting stuff in at record valuations that are uneconomical in terms of return prospects going forward, you should ask yourself, how much would you take to the tables at Vegas and plunk down in a weekend? And when you answer that question, that'll tell you what portion of your life savings should be in stocks at those valuations. Now, I'm not saying there's not going to be another great buying opportunity. I'm saying we're going to get through the coronavirus. It's not going to kill us all. We're going to learn a lot of things from this. But the point of the leverage that I'm speaking of, and the over-the-counter derivatives, in the amount of debt, corporate sector, all of it, and the farce of the throwing cash in the system every day and calling it functioning, is that this amount of leverage can't wait months, is my point. It's forced selling. There's hedge funds right now that are going down because they were aggressively levered and they've been long and wrong, or short and wrong at the wrong time. This is in a very volatile environment. So people are getting whipsawed and massive losses and forced selling. And we're seeing it across every single asset class except, treasuries and U.S. cash and Canadian cash basically are the only things that are up here to date. And that's what we own in our accounts, and we've made money here to date, and I'm very grateful for that. And I'm waiting for an opportunity to buy things at a more economical levels, which I believe is coming. But I don't think we're there yet. And I think we're going to have massive capitulation before we get there. And it's the losses between here and there that people are going to have a very difficult time surviving and thriving and recovering, because it could take many years again after that for prices to come back. And I think that they've been conditioned to buy the dip by all this intervention that's gone on. Janet Yellen admitted she's out of bullets last year. And, now we're just seeing the madness continue with whatever else they can throw at this thing. But it's not going to reverse the reality of what needs to happen, the cleaning out, the cathartic, bad management, bad leaders. This has all played a huge role in where we are today.
Yeah, irresponsibility at every level of society. How we come back from it, where we'll wind up in another 10 years, kind of dread thinking about it, but somehow the human race manages to muddle through these types of events and always get to a better day. Hopefully that better day will be sooner rather than later. Anyway, that's it for now. Make sure you check out Danielle's site, jugglingdynamite.com, our site, financialsurvivalnetwork.com. Send us an email, give us your thoughts, or put up your comments on the YouTube. It's actually easier to put them up on YouTube than the site. And some of these comments, Danielle, are quite amusing and entertaining. And some of them are downright nasty, but I have a thick skin, so I don't take it too seriously. So just send us the email, kl@kerrylutz.com, or however you are getting the show, whether it's YouTube, on a podcast platform, wherever. Please like, subscribe, and share it, because not enough people knew this information when it could have done you the most good. But there's still time to save yourself, so you better do it, and do it very quickly. Danielle, we'll talk to you in a couple of weeks.
Okay, Kerry, thanks.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.